Hello, it's Sam Banks here to give a very short explanation of a very important strategy. A strategy that, well, that could be rare, but works most of the time. A lot of success in trading requires patience. I always say that patience is one very key ingredient in successful trading. You have a strategy that you have a strategy that you're good with. It would really help that you're patient for such setups to appear before you trade in the market. One of such strategies that I use is the RSI divergence. The RSI divergence. For the RSI, we're going to have a a session, or we have actually had many trainings on RSI, but today we are going to be applying a very pivotal use. Normally when you talk about RSI, one of the ways it is known, or one of the most popular ways it is used, is to tell overbought and oversold region. And yeah, it's a very good strategy when you use the RSI to judge your overbought, oversold region, especially within a trend, so that you know where to take entries. But another part, or another portion equally important and highly successful aspect of RSI is the divergence, especially with price. So I'll just go ahead and add RSI to my chart so that I show us what it is. So to do that, I just go to indicators list. I'll go to indicators list, and I will search under oscillators. And here you have it, relative strength index, which is RSI, relative strength index. Now, when you're using this, I'll just advise you go with the default setting, the default period of 14, levels of 70 and 30. Okay, some people add 15 there, some people even make theirs 80 and 20, but I think 70 and 30 for what we want to do is fine. Okay, so I just select OK on my chart. So here you have it, the RSI zone here. One important thing you will notice about this zone is that it's made up of about four markers here. You have the 100% marker, the 70% marker, 30% marker, and 0% marker. Now, generally, it's known that the 30% and the 70% are oversold and overbought regions respectively. Okay, so for your 70%, when price heads to your 70%, it's generally known as an overbought region. But price heads to your 30% or below your 30%, is generally seen as an oversold region, right? Now, but for the purpose of divergence, we're going to look at something very important. Now, this RSI line is what we will use to tell divergence in relation to the behavior of price. Okay, we'll use the RSI line to tell what divergence is in relation to, the behavior of price. So to do this, I am going to consider places where we have now, when we talk of divergence, it's what we mean is price on the chart is giving us a set of maybe higher lows or lower lows, in the market, but RSI is doing something different. Okay, your RSI is doing something different, and then we're going to look for such examples and try and figure out what that means when we are actually trading. Okay, now if we look at one example, I would love us to look at let's see for GBP USD. Just scroll back a bit, show us what exactly I actually mean. So most times you would find divergence zones, around new highs, or around high points, around low points. It's a very strong measure of telling you price is about to change. Price is about to do this, price is about to do that, right? Good. So for instance, I found one here. If you look at this example, if you compare between here, this top part between here and this zone like this, you can see that price was making what? Higher highs around this zone. You can see price was making higher highs in the sense that, this high was higher than the last high, and this high was higher than the last high. But if you compare the RSI around that same zone, you compare the high of the RSI, you find out that the RSI was making what? Was making lower highs around that point. Around the point where my price is making higher highs, my RSI seems to be making lower highs. This is what we call a divergence. Okay, so this RSI already, which of course is a momentum indicator, is telling me that, oh, we are having lower momentum for that buy you're seeing. Oh, that buy that's giving you a higher high, which technically means, oh, price is making higher high. Oh, this is a short-term uptrend, right? Your RSI is telling you that the momentum, this strength is actually reducing. So what happens from that zone? From that zone, we actually have what? A fall down. From this zone here, price actually makes what? Over 30 pips or 40 pips of fall in the market. This is an example of a divergence. And of course, you would have noticed that it took a bit of time for me to locate this on 1 hour. I love trading divergence, especially on the 1 hour time frame, because from that, I feel like from my experience, from number of trades and all that, I always will be very comfortable with at least 30 pips in the market once I find a move like that. And being somebody who I understand myself, I really trade with a very good number of lots, with a high lots. I would rather wait for a good confirmation like this and then give a very good amount of lots to take advantage of that move. Okay, so that is how a divergence works. Let's look at another example of a divergence. In this same GBP USD here, if we compare this low to this particular low here, oh, price has touched this low, oh, price has gone down, has given us a lower low, right? But what is our RSI saying? Our RSI is saying that what? This particular zone is a higher low. RSI is telling us this particular zone is a higher low. So what does price do? Price pushes up, comes down to retest this particular support zone, and then gives us a whole lot of movement. Even from here, price was able to give us over 30 pips. Like I said, whenever I find a divergence, I always expect at least 30 pips of move. Okay, but price was able to give us that 30 pips and then come down to retest this particular support zone, and then all the way to close to 100 pips. That is the power of divergence. Okay, so when your price is making higher lows, higher highs, that is a good time for you to confirm from your RSI to see what it's all about, and that's a good time for you to take advantage of a move in the market. Right now, like I said, RSI divergence is actually pretty visible on different time frames. Some smaller time frames, you can see it and all that, but I prefer trading it on the 1 hour time frame, because on the 1 hour time frame, I can actually get a move that I feel like should be able to give me at least 30 pips of profit. Okay, a 30% of profit. And I have said that one easy way to identify RSI is where your price seems to be making new highs. Where your price seems to be making new highs, that is a good place, or higher highs. Let me not say new highs. Where your price is making higher highs, that's a good place for you to confirm from your RSI. Look at this example also, still on GBP USD. Now from here, at this particular point here, price is what? Making a higher high here. Oh, wow, a higher high. It seems like price is going to break this resistance and all that. But what happens around the same zone? Around the same zone, you notice that if I check my RSI is actually giving me somewhat of a lower high here. RSI is kind of giving me a lower high here. So what happens? It's not conforming to what price is doing here. So from this zone here, I can actually expect a fall in the market, and you can see how much price actually fell. Do you understand? You can see how much price actually fell. So when you're combining one high to another high, one low to another low, it's always good to use your RSI to actually confirm momentum, so that you can take advantage of early reversals in the market. You can take advantage of early reversals in the market. Another example, just to make sure that we have as much examples as possible. Look at this place here. Price gave us a higher high here. Very sharp, very sharp movement, but my GBP USD RSI here is giving me what? It's giving me a lower high. That is a divergence. I expect price to fall from that point here. Okay, so we compare the highs to the highs of the RSI. We compare the lows to the lows of the RSI. And when they are not conforming, we go with what the RSI is showing us. We go with what the RSI is telling us. That is how to trade RSI. One more example like this, GBP USD from here, what happens? We have what? We have a lower high here. But what does my RSI tell me? My RSI tells me that, hey, listen, this is a higher low, right? We have a lower low here, sorry. We have a lower low, but my RSI says, hey, relax, relax. This is a higher low. And what do we expect from there? We expect a push up from there around the nearest support. Okay. One way I've actually found it easier to locate or to compare highs and lows with my RSI is I have always liked to switch. I switch my chart type from candlestick. I switch it from candlestick to what? To line chart at the top here. At the top here, I just select line chart. Now, I can easily use my line chart to properly tell highs and lows of the market. You understand? I can easily use my line chart to check high and low. Like for this zone here where we first checked, you can see that is a higher high here. But my RSI is showing me what? A lower high. That's an opportunity for me to take advantage of a sell in the market. Now, divergence works a lot for currencies. If you, of course, it works for other instruments, but if you're a currency trader, you want to take advantage of currencies, divergence is a very, very strong tool when it comes to trading this market, trading currencies. With divergence, like I said, when moves like this occur, even if they don't occur all the time, you can actually take advantage of at least 30 pips of the market in your favor. And if you're someone like me who understands that opportunity comes but once, as they normally say, you want to do the best. With such moves, I normally do a very good lot size. I'm not doing anything less than 0.5 to the upside, because that's an opportunity I might not get, and so I want to milk as much as possible. Look at another example here of my line chart, showing me a higher high here, but my RSI doing what? My RSI is showing me a lower high, and that is that is a story or that's a signal that tells me I should look out for a fall in the market, right? So these things are very, very, they're very rampant. Once you are patient enough to watch your chart, monitor your chart, and follow what price is actually doing. You understand? Now, you have many examples here that have shown us examples of divergence, comparing the high of your chart, okay, and the high of your RSI, comparing the low of your chart and the low of your RSI. You can get you can use the RSI divergence, for which you can get very, very, very profitable. Okay, so yeah, do your part, go into try and understand what we've talked about. If you need to do one or two practice for a few days on your demo account to get the hang of it, to get confident, what no one can take away from you, right? What no one can take away from you. I actually had a very powerful saying. He said that if you spend all your time, spend all your energy working at something that can only give you so little, the best you get is so little, right? And that's why I spend my time, I spend my energy looking into this market, because it's one of the few opportunities that reward a whole lot more, in terms of effort to reward, right? So put in the time. Anytime you put in to learn this is an investment, and then you can do this, use a very good lot size, when you get divergences like this across currencies. And I'm very sure that you will be very, very profitable. Okay, so get confident with this strategy, and as I always say, you can bank on guaranteed success. Bye.